Ladies and gentlemen, welcome back to the channel. I hope you guys are ready for another very volatile trading week of 2023 next week, because you're going to get CPI. You're going to get bank earnings that come out towards the end of the week. That is going to cause the markets to move huge, and we're going to talk about when these catalysts are, what the expected numbers are, and what it could do for AMC. On top of all of that, we're going to go over specific data on AMC stock that you want to know if you are an investor in AMC, guys. So let's get into all of this information. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in that comment section, baby. But let's get into the information. So first things first, we're going to talk earnings, economic data, the things that have nothing to do with AMC, that move the stock, because there's only so much, you could say about AMC and the data when CPI is going to come out, when you're going to get bank earnings. Those things, they're going to move the markets dramatically, and it doesn't matter what, happens with AMC unless there's good news or bad news on a day-to-day basis with AMC. The stock more than likely moves off of news catalysts. And that's important to know, because negative news catalysts, or negative economic data, I should say, can move the stock down quite a bit. As of recently, that has not been the case. As of recently, you've seen other stocks such as Apple, some of your larger stocks that have not come down as much as, say, AMC, dropping a lot more on those bad days, on days where the markets are economically sensitive to the data. AMC has been relatively outperforming compared to some other stocks. For an example, just last week, Apple had a pretty bad week. Apple would drop, 3%, 4% a couple days, and AMC was down 1.5%. 2%. Relative to Apple or to other stocks, AMC performed pretty well last week. Now, let's get into the economic data, guys. So for Monday, you are going to get the consumer inflation expectations for December, and this is for the next year out. So the next year inflation expectations are 5.2%. Now, if these inflation expectations come down, that's going to be the most positive thing that could happen on Monday. If that does happen, expect this rally to continue, and it could get a little bit more aggressive, because inflation expectations always are followed up upon. So for an example, if inflation expectations were rising for 2023 and 2024 and 2025, inflation would also rise over the next couple of years, because why would it not? If people expect higher prices, then businesses will deliver on that because people expect it. It's not like people would say, yeah, I don't want that product or service anymore, if you already expected it to go up. It's like gasoline, right? If you expected gasoline to be more expensive tomorrow, well, you might buy it today, but you're not going to be super mad that it's more expensive tomorrow because you already knew it was coming, right? Kind of the overall logic with that. And you are expecting 5.2%. Anything less than that's going to be positive. Anything that is, higher than that is going to be extremely negative. You are going to get, and that does come out at 11 o'clock in the morning, I should say. At 11:30 in the morning, you're going to have a 3-month bond auction and a 6-month bond auction. This can move around the bond market, which does move around the stock market. So that's basically it for Monday. As far as Tuesday, you have wholesale inventories month over month for November. You're expecting a 1% increase. That comes out at 10 o'clock in the morning. Again, that's not going to be a huge data point, but it can move the markets, as well as at 1 o'clock p.m., a 3-year bond auction expected to come out at about 4%. Depending on demand for bonds, it can move around the stock market, right? The bond market can signal kind of recessionary environments to come, especially over the next 3 years. That one's going to be a little bit more important than 10 years, because over the next 3 years, you're probably going to go into a recession and then come out of it. So what are investors willing to pay for these bonds? Is it 4%? Do they want to get paid more than that? How economically sensitive is the economy to a slowdown? You'll get some answers to that on Tuesday. Now, on Wednesday, you're going to get NBA mortgage data really all throughout the day. From 7 o'clock in the morning until about noon, you're going to get a lot of data, as well as data on crude oil inventories and diesel inventory. So that can be important. I don't think people are concerned about the energy crisis as of right now. Now, on Thursday, that's where things really heat up with the CPI report. So 8:30 in the morning, you're expecting the inflation rate year over year for December. We are firmly expecting 6.9%. If this number comes in higher or lower, you guys already know with inflation, it's going to cause that big reaction. Now, more important than the inflation rate year over year is going to be the core inflation rate month over month. That's the big one to be watching, and you're going to get all of these figures. You're going to get inflation rate year over year, inflation rate month over month, core inflation rate year over year, and core inflation rate month over month. Those 2 month over month numbers are going to be the most important, because that's going to really signal to investors if inflation continues to slow down. And if it does, it's going to be very positive. So for the core inflation rate month over month, you're expecting a negative negative 0.1%. You're expecting a deflationary inflation rate. And that's actually, that's the headline inflation rate month over month. You're expecting deflation for the month of December, which I think is reasonable, right? You've seen a lot of sales, you've seen a lot of things going down in price, so I do think that is somewhat reasonable. I will tell you though, the risk here when you're all of a sudden going from, huge numbers in inflation increasing, right, to deflation month over month, the problem with that is expectation. So it's going to be pretty hard for inflation to come in, let's say, at negative 0.2% compared to a positive 0.1%. So you got pretty low expectations already, right? Or should I say high expectations that inflation is coming down aggressively, right? Deflation, that's aggressive month over month. So you're already expecting a lot out of CPI. So if you don't get that massive deceleration, that's where you could see some pain in the markets. And especially if you do see inflation month over month for whatever reason ramping up, you definitely want to watch services. That's going to be the hot spot more than likely on the inflation report, as it typically has been over the last couple of months. If that number comes in higher than negative 0.1%, if it's anything less than deflationary, it's going to be a very negative thing for the markets. And that is the big risk I see on Thursday, that it's not like you're expecting a super high inflation reading, right? That's a lot better, because if you're expecting a high inflation reading, you come in, you get that number that's way lower than that, that's very good. But if your expectation is already way low, then it's going to be hard to come in way lower than that already low number. So hopefully that makes some sense. I'm trying to break it down the simplest way to understand it, and I think that's just the easiest way to try to understand it. So rewatch this segment of the video if you have not already. It's definitely going to be the most important thing of this week. And really, that core inflation rate month over month and inflation rate month over month, they're both going to be important. Now, for the core inflation rate month over month, you are expecting a 0.1% increase. The previous increase was 0.2%. So again, you're expecting month over month headline inflation to go down again by about 100% month over month. So you got some pretty high expectations that inflation is going to come down aggressively. If it does not, negative. If it does, that's very positive, and we can hold on to some of these gains, if not expand on some of those gains. Now, you do have as well at 8:30 in the morning on Thursday initial jobless claims for January 7th and continuing jobless claims. I don't think these are going to be nearly as important as CPI. I don't even think the markets are going to factor it in. Like, if we see the markets up 3% or down 3%, it's not going to be because of the initial jobless claims or the continuing jobless claims. But if this is its own day, right, it can be important. So we definitely got to point it out. Now, on Friday, let's see, you are going to get the Michigan Consumer Sentiment Preliminary Survey for January. That's going to be very important as well, because you're going to get consumer expectations for inflation, for their own, financial stability. Are they looking to spend more money? What are they, planning for 2023? For a lot of reasons, it's important, and there's a lot of information in that survey, so we obviously can't break it all down right here and right now, but that will be big on Friday, and I think it will help to continue whatever move we see in the markets from CPI. If we get a negative reaction from CPI, the Michigan Consumer Sentiment Survey, if that's also negative, it could make for a really rough end of next week. If both of these data points are positive, well, that could make for a pretty good end of the week. And I know a lot of people get kind of upset when I'm like, is 50-50? I mean, it almost is at this point. I would tell you, though, the risk for a downside move is a lot higher, considering the expectations are that inflation is plummeting, right? If it's not plummeting, if it's just falling a little bit, that's not going to be good. So we got to lay out these risks and define them for you guys. Most importantly, for people that do have short-term trades, because that's where you can really get blown up around these certain catalysts. So that is going to be all for the economic data for this next upcoming week. Now, as far as earnings, you're really not going to get anything that's sizable, that's important to the markets until Friday. On Monday, you're going to get Tilray, WD-40s, Jeffries, a couple other companies that are not going to be important to the markets. Now, you're going to get Bed Bath & Beyond on Tuesday. They are talking bankruptcy, so that could be important. It could move AMC. It could move meme stocks. Not necessarily expecting it to, although. On Friday, you're going to get Bank of America, United Health Corporation, JP Morgan, Citi, Wells Fargo, Delta, BNY Mellon, BlackRock, and First Republic Bank that all report earnings. Citi, Bank of America, and JP Morgan, those are some of your top dogs. JP Morgan and Bank of America, those are literally the top dogs as far as banking is concerned, and what they have to say about the consumer, how they are spending their money, how they are just feeling on the overall economy, will be important. Think back to what we've seen in 2022. A lot of our worst days in the markets were due to Jamie Dimon, CEO of JP Morgan, coming out and making some really hawkish statements. You've seen some big drops based off of not only the earnings, but what these CEOs have to say about the economy. So I do think that will be important on Friday as well. And if you can't tell, the first half of the week, or the majority of next week, is going to be pretty docile until you get to Thursday and Friday. That's where things are really going to heat up in a massive way. If we do take a look at AMC more specifically, why I started with all of that is because whatever happens, if we see a negative or a positive week, it's probably going to be super negative or super positive. That is going to play a massive role in what happens with AMC. And what we seen last week was the cost to borrow rates and the live short interest continuing to go higher. Now, as of January 7th at 5 o'clock p.m. at the time of recording this video, the live short interest of free float is sitting at 21.73%, up 1% just on Friday. The amount of shares currently sold short jumped 1.11 million on Friday as well, now sitting at 112 million shares that are sold short. Live numbers from Interactive Brokers has the cost of borrow rate at about 98%, 650,000 shares that are available to be sold short. Cost of borrow average at 236.5%, cost of borrow max at 268%, and cost of borrow minimum at 112.39%. So you're seeing some super high numbers here, guys. And if we do get a positive week in the markets next week, it could really send AMC stock up in a massive way. And I think just based off of how cheap AMC option premiums are and how cheap the stock is, it makes a lot of sense to go in with a bullish trade for next week. And that is personally what I am going to do. Most likely we'll have to take a look at the premiums in real time, see how the stock is moving, especially if we get a drop in the beginning of the week. that could be a really good moment to make a trade. Now, if you guys want access to all of my trades in real time, link down below in the description, or I always say the description, the comment section of this video, guys. Nonetheless, let's take a look at the option activity. And I do apologize for saying nonetheless so many times. I don't know. I guess it's just a habit word. You get that from time to time. But option activity on Friday. Nonetheless, just kidding. Just kidding on that. Too quick, too soon. All right, I got it. Positive order value, 1%. 1% positive order value. Last week, 1% positive order value. So it's like really, really bad across the board for AMC option activity. Last week, you've seen 120 orders totaling $54.55 million. Positive order value, like I said, of 1%. The 1 week, Thursday and Friday numbers are all 1% positive order value. So we're going to skip that. It's all the same. On Friday or Thursday, you did see 10 orders totaling $3.34 million. And on Friday, you did see 11 orders totaling $10.5 million. So you've seen a decent amount of options over the last week, but it was so skewed to the negative side. And you're seeing a lot of these options that are essentially like institutional option activity. A lot of hedge funds, I think, are covering up their short positions, and we've touched on that a couple times here on this channel over the past couple of days and weeks. We're gonna make an in-depth video on this coming tomorrow, so you guys definitely want to pay attention to that. But you're seeing $10, $15, $20 puts that are being bought by institutional investors. This could very well be to hide the actual short interest, to report to the SEC, to FINRA, that you have actually covered on your short position, when in all reality you have not, guys. So that is pretty much going to be all for this video. You do want to watch to see if we break under this 360 level in this next upcoming week. I don't really think we're going to, considering we are in a bottoming process here, but nonetheless, if we do make an upside move, probably around $5 per share is where I would target. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.